I had to get back and look at the view of the forest versus the tree bark. Yeah, obviously gold and assets are in, hard assets are in a real hard bull run. They're continue to be. But one thing I start thinking about, combined with a couple other things, well, this was a 2008 crisis here, obviously, and this is a monthly chart, so don't even think about. I'm not exactly no chartist, okay? I look at a lot of different things, and I don't want to knock anybody that is a chartist because everybody's got their different way of doing things. And obviously, I probably sold too quick yesterday, because there was a bounce in silver. But I don't think, I think these metals are going to get hit a little harder, and I'm really going a hell of a lot by Marc Faber. I think this guy's right. And I sold off. I had a little small position in gold, and it had a 55% gain because it was on. It was a small position, but it had a 55% gain because it was on Ultra Gold. UGLD, whatever the hell it is. I forgot exactly the symbol, but I was listening to Marc Faber, and I remember I said this a couple times. I sold it right around the top. It was over 1900 because he was saying it made sense though. But looking at a couple other things, I'm thinking this was the correction, but I don't know because what can happen with the euro. I'm kind of my thought is the euro is going to be okay ultimately, and they're going to fix things with one way or another by money printing or whatever, but there's going to be some drama story that's going to knock the markets down more. So I'm kind of like out of a lot of it, and I'm in some of this double leverage silver, but not that much of it. Some of the double leverage oil got out of the sprott, and I'm thinking, actually I didn't get out of it too bad because I got out of it a lot of it before this plunge too, so it wasn't that bad. I can get in it cheaper. I can buy the whole thing back, less money right now, but I'm going to just let the AGQ do whatever its crap is because there might be a bounce. And I'm thinking there's going to be some problem because he's saying it. And man, it's not my intuition to say that. But I don't like, exactly. But he might be right because I'm worried about what's going on happening March 20th or 23rd. And this might be a little lengthy. But I am looking at a lot of different angles. First off, when you're looking at these charts, you're seeing how choppy this is. This is a monthly. This is very choppy. This reminds me of, I know this is a linear chart, it's not exponential, so it shows more choppiness when there's bigger dollars, but it reminds me of more of 2008. And something else that reminds me that we were more into 2008. Look at this gold platinum ratio. Gold is still 4% higher than platinum. That's fundamentally incorrect big time, considering what's going on. I know the metals took a big bounce. Actually, I should have went into, I was thinking about dumping into some more double leverage, either platinum or triple leverage gold for a bounce today and just sell it off, but I wasn't sure, so I just stayed the hell out of it. And I think a lot of people are on the sidelines. I think this is kind of a normal bounce. The only thing that's going to change everything is if everything is smooth sailing on the euro. That's what's going to change everything. And this is what I think why it might not be so smooth sailing. I think it's going to survive, but there's going to be some other problem that's going to come up again this month. The euro is practically unchanged against the dollar a day before Greece finds enough. If enough investors have agreed to deal to restructure the country's debt, Greece needs to complete the bond swap to get a second package of bailout funds and avoid default. Investors who agree to participate will have to trade their Greek government bonds for new ones for lower value and lower returns. Investors who agree to participate. Principal investors who own up to 46% of debt have already committed to the swap. The rest have until Thursday to do so? I don't think that's going to happen. Just me thinking of how things, not being familiar with this, like specifically. But if you can't get these people to bite as of now. How are you going to make them do this? How are you going to make them do this? I think this is a very important statement here. Traders are worried that not enough bondholders will participate, which could lead Greece to defaulting on its debt. Now, I don't know if it is going to default, but I think it's going to be like such a big scare that it's going to default that the markets are going to get hammered. That's when you're going to see the money printing and the QE coming out. So, I got some double leveraged silver, but, if this junk starts springing up a little bit more, goodbye. I mean, even if it's at a loss, goodbye. I don't trust any of this stuff right now. I don't trust it. I bought back my copper position because it was a little cheaper. Anything I can get back a little cheaper, but it wasn't a big position. I wasn't really mainly in that. And it's kind of spread out, So, I'm not touching the palladium right now. And, part of this is because I'm in unsettled funds. I could do maybe a small bet, but I want to stay out of it a little while because I am thinking that there's a problem with this that's going to come up that's going to affect the markets. And, I was reading, I had to get it right from the source. This is actually on Marc Faber's site, Marc Faber Info. And, this guy is a good guy to read a lot and actually read this site. The heck with Alex Jones, the heck with all these other crazy people out there, or even Max Kaiser, or all these other James Turk, and all the silver bloggers out there like this SGT Bull and Brother John F and all this other garbage. But you know what? They're doing a great function because they're going to drive the price of silver way up. They're going to be people to buy it when it's too high. So I don't know. They're doing their duty, right? The gold market can be manipulated on COMEX by big forward paper contracts. Now it tends to be obvious to the major drive suffered by last week's gold. It fell $60 in a matter of minutes. Then got pushed down further before making a relatively minor recovery. And that's probably what's going on today. This might be just a minor recovery. Something else too. We're going to have United States non-farm payrolls coming out this Friday. Payroll report, which comes out on the first Friday of every month. So that will heavily affect the U.S. dollar, the bond market, and the stock market. Now, last time, they had some stuff about the unemployment rate unexpectedly fell to 8.5%. There's a lot of people suspect the actual numbers, but when the numbers come out and they look good, it does affect the markets. It does, and it could drive things up or down. This will affect some things, but, I got to go by what this guy says. And, my common sense says, I don't know, this doesn't look too good, and I could see why people would be worried that not enough bondholders will participate. So this could be like just a bounce today. This could just be a bounce. I was kind of expecting that, but I don't want to jump back in there again and try to get the bounce I should have. But then, if you're on unsettled funds, you actually have to stick with something till the funds settle. So sometimes I don't like just buying, jumping right back in. So I'm going to wait. And I think that there may be more problems with the euro. And this is where I was thinking, like, that was the bottom, but I don't know. I got to keep listening to Marc Faber because the majority's wrong and that guy's right more than the majority. This was Fibonacci, and I believe in this stuff. Believe me, it's not hocus pocus. Charts aren't hocus pocus, and this Fibonacci is definitely not hocus pocus. It's used so much and so often and it's found so much in nature. It's real. It's not BS. You can find it all over in nature. But the gold was down to 1522 on December 28th, 29th, to 2011. It had a high of, actually I think it was 1921, September 6th. I think that's where I got that 6 from. But it's like getting pinpoint accurate. It's not pinpoint accurate, but it is about right. So we could have had this retracement, which was about right from yesterday. That was about right. 1768. Excuse me. not that number, the other number, 1674. And the reason I'm going to plug it, because I was thinking of something else, but 1674, that is about right, because we had a climb of $11. Here it is. That would have been 1675 yesterday. That's about right. That's pretty close. And if we look at the other number, I don't know what it went up to, 1788 approximately. And this is what I was looking at over here, 1686. So that's pretty close. That's like to hit the fib level from a couple highs and lows. In other words, the high point in the beginning of September to the low point at the end of December, and the low point at the end of December to the high point at the beginning of March. One had a, they both hit, common retracement points. One right here, and the other one right here. So, it kind of makes me think, but it could be the next level. It could be the next level. And that's where, this is like a tool, so we might see a bounce, and there might be hitting the next level. So I'm staying the heck out of it for now. The only thing I'm going to hold in was oil. I think this market is pretty much bullish. I'll just leave it the hell alone. And, as far as what's going to happen in silver, I kind of expected a bounce today, but I don't think it looks very bullish for March. Not at all. Not at all. And, when you're looking at this again, silver, this kind of reminds you of the 2008 crisis. It does. It's like we're still in a crisis. The only thing that brought this up, like here, the only thing was QE. QE. Yes, I know, but that QE's killing the dollar, and silver is helping you preserve your money, right? QE, and that's where I almost say to myself, I don't know why people are criticizing Bernanke, because when he, they call him a devil when he does QE and he makes you wealthy, in relative to other assets, and when he opens his mouth and does not do QE, well, your silver falls. So, it could be one way or the other. So I think the guy, if he's going to be Helicopter Ben, he's going to be my hero. But I'd like to know when he's going to be Helicopter Ben, so I can get in here and get some change, But as far as, obviously I'm not some really big guy on charts, but, and a lot of times I find out when you get too technical, it's not, doesn't help that much. It doesn't help that much because the landscape can change. It's almost like if you want a really super technical guy, you should have another guy that works with somebody that's a technical guy to balance it, to make sure the curveballs don't come in here. So I can be technical, but I've never really got into this stuff like a lot. I've gotten into other numbers and accounting things, but mathematic things. But I like the Fibonacci. I think it very much, and it quite obviously that's something to pay attention to very much. So, but today we're seeing somewhat of a bounce in silver, but it is definitely in a bearish trend, and the reason it's in a bearish trend is not necessarily, well, I guess you could say the charts too, but it is the Euro news. The Euro news is looking worst, and until that changes, this trend will not change. This trend will not change. So it could drop down, I mean, it's not crazy to think it could drop down even here, and if you go back to, probably making this too lengthy, but if you go back to, this is actually the whole correction period right here. It's actually probably longer, but say this is the more recent correction period. To drop down to this point is not too crazy to think of. So if there's some bad news, it can go down here. That's when I'll be buying. That's when I'll be buying. But I don't know if it's going to drop there. I don't know. But you know what? This guy, if there's somebody to pay attention to, he's not God. He's not 100% right. I pay attention to him. Man, I'll tell you what, I pay attention to him big time.